In a significant geopolitical move, Saudi Arabia and the Organization of the Petroleum Exporting Countries, OPEC, have recently taken drastic measures that could potentially destabilize the global oil market and wreak havoc on the U.S. economy. This complex scenario unfolds against a backdrop of long-standing economic interdependencies and political tensions, making it a compelling story of power, resource control, and international diplomacy. The decision by Saudi Arabia and OPEC to halt U.S. oil sanctions represents a critical juncture in global energy politics. For decades, the United States has leveraged sanctions as a tool to exert influence and control over oil-producing nations it deems adversarial or destabilizing. These sanctions have often targeted countries like Iran and Venezuela, aiming to curtail their oil revenues and weaken their political regimes. However, Saudi Arabia, a leading member of OPEC and a traditional ally of the U.S., has now taken a stance that challenges this dynamic, potentially reshaping the geopolitical landscape. The roots of this dramatic shift can be traced back to several factors, including the evolving global energy market, internal pressures within Saudi Arabia, and broader geopolitical realignments. Over the past decade, the global energy market has undergone significant changes, with the advent of shale oil production in the United States playing a crucial role. The U.S. emerged as a leading oil producer, reducing its dependency on foreign oil and reshaping global supply chains. This development altered the balance of power within OPEC, with traditional heavyweights like Saudi Arabia having to contend with a new reality where the U.S. was both a competitor and a consumer. Internally, Saudi Arabia has been navigating a period of economic transformation under the Vision 2030 plan spearheaded by Crown Prince Mohammed bin Salman. This ambitious initiative aims to diversify the Saudi economy away from its heavy reliance on oil revenues by promoting sectors like tourism, entertainment, and technology. However, the economic transition has been challenging, with fluctuating oil prices and regional instability complicating efforts. By halting U.S. oil sanctions, Saudi Arabia might be seeking to assert greater control over the oil market, stabilizing prices to support its domestic economic goals. On the geopolitical front, Saudi Arabia's move can be seen as part of a broader realignment. The kingdom has been recalibrating its foreign policy, engaging more actively with regional rivals and global powers outside the traditional U.S. sphere of influence. This includes improving relations with Russia and China, both of which are significant players in the global energy market and have often been at odds with U.S. policies. By aligning more closely with these nations and within OPEC, Saudi Arabia is positioning itself to navigate the complex and shifting landscape of global energy politics. Saudi Arabia can leverage its collective power to counterbalance U.S. influence. The immediate impact of Saudi Arabia and OPEC's decision to halt U.S. oil sanctions is expected to be a surge in oil prices as the supply becomes constrained. This price increase will likely lead to higher costs for consumers and businesses alike, potentially triggering inflationary pressures in the U.S. economy, which is already facing challenges such as inflation and post-pandemic economic recovery. This development could destabilize the U.S. economy, which remains significantly dependent on oil despite advances in renewable energy. Higher oil prices translate directly into increased costs for transportation, manufacturing, and various industries reliant on petroleum products. Consequently, consumers may face higher prices, reduced disposable income, and potentially lower economic growth. Small and medium-sized enterprises, which often operate on thin margins, could be disproportionately affected, leading to potential business closures and job losses. In the broader context of international relations, Saudi Arabia and OPEC's move to halt U.S. oil sanctions is likely to strain U.S.-Saudi relations. Historically, the U.S. and Saudi Arabia have maintained a strategic partnership, with oil being a key pillar of their relationship. However, recent years have seen increasing friction, particularly over human rights issues and differing approaches to regional conflicts. This latest development could exacerbate these tensions, leading to a reevaluation of alliances and partnerships in the Middle East and beyond. Moreover, this shift might encourage other oil-producing nations to reconsider their positions regarding U.S. sanctions and foreign policy. If Saudi Arabia, a key U.S. ally, is willing to challenge U.S. oil sanctions, it sets a precedent that could embolden other nations to follow suit. This could undermine the effectiveness of U.S. sanctions as a tool of foreign policy, reducing Washington's ability to influence global affairs through economic measures. In response to this unfolding situation, the U.S. government will likely have to reassess its energy policies and foreign strategy. There could be a renewed emphasis on bolstering domestic energy production, including further investment in renewable energy sources and technologies. Additionally, the U.S. may seek to strengthen its alliances with other oil-producing nations to counterbalance the influence of OPEC. Diplomatic efforts will likely intensify to mitigate the impact of higher oil prices and to maintain stability in global markets. The potential for broader economic fallout from this scenario cannot be underestimated. Higher energy costs could slow down economic recovery efforts worldwide, particularly in regions heavily dependent on oil imports. Emerging economies, already vulnerable due to limited financial resources and existing debt burdens, might face heightened economic distress, leading to increased social unrest and political instability. This could further complicate the global economic outlook. Furthermore, the environmental implications of this situation are significant. Rising oil prices could spur a renewed focus on alternative energy sources as countries seek to reduce their dependence on volatile fossil fuel markets. This could accelerate the transition towards renewable energy, promoting investments in solar, wind, and other sustainable technologies. However, in the short term, higher oil prices might also lead to increased exploitation of less conventional and potentially more environmentally damaging oil reserves, such as tar sands and deep-water drilling. As the U.S. grapples with the economic repercussions of this development, there will be a renewed focus on energy independence and sustainability. Policies aimed at reducing carbon emissions and promoting green energy initiatives could gain traction, supported by both economic necessity and environmental considerations. The transition to a greener economy, while challenging, could present new opportunities for innovation, job creation, and long-term economic resilience. On the political front, the decision by Saudi Arabia and OPEC to halt U.S. oil sanctions could have far-reaching implications for U.S. domestic politics. Energy policy is often a contentious issue, and this development is likely to become a focal point of debate among policymakers, industry stakeholders, and the public. There will be increased scrutiny of the U.S. government's approach to foreign policy, energy independence, and environmental sustainability. This could influence upcoming elections and shape the political landscape in significant ways. As this situation evolves, the global community will be watching closely to see how the United States responds. The Biden administration may leverage this crisis to push for accelerated investment in clean energy infrastructure, aligning with broader goals of combating climate change and reducing dependence on fossil fuels. Internationally, the U.S. might seek to forge new partnerships and strengthen existing ones with other oil-producing nations, such as Canada and Mexico, to secure more stable energy supplies. The broader international ramifications could also see shifts in trade policies and economic alliances. Countries that are heavily reliant on oil imports might seek to diversify their energy sources, investing in renewables and exploring new technologies to reduce vulnerability to future supply disruptions. Additionally, this scenario could galvanize global efforts towards more cooperative and sustainable energy solutions, fostering innovation and collaboration in ways previously unseen. The decision by Saudi Arabia and OPEC to shut down U.S. oil sanctions is a catalyst for significant change, challenging the status quo and prompting a re-evaluation of global energy strategies. While the immediate impacts might be challenging, this disruption also offers an opportunity to build a more resilient, diversified, and sustainable global energy system for the future. This pivotal moment in global energy politics has the potential to destabilize the U.S. economy, drive up oil prices, and trigger broader economic and geopolitical repercussions. If you like this video, please give it a like and subscribe to our channel. Also, could you leave your comments below and tell us, should Saudi Arabia and OPEC lift all U.S. oil sanctions? We want to hear from you. Thank you for watching and see you next time.